Hi everyone, and thank you for joining today's webinar, Digital Identity for Financial Inclusion. My name is Priya Punathar and I will be moderating today's webinar. We are all looking forward to discussing digital identity and the implications for financial service providers in emerging markets. Today's presentation has been made possible by the Citi Foundation and will be led by Ian Brogum, our Senior Manager of Digital Strategy with the Global Advisory Solutions here at Axion. We also have two panelists on the line, Gift Mahabo, Director of Operations and Technology at Axion, and also Monika Poor, our Director of Digital Solutions in India, also at Axion. Before I turn it over to our speakers today, I just have a couple of housekeeping items to discuss to make sure that we're making the best use of our time here together and everyone can actively participate in the discussion. Ian, if you wouldn't mind going to the next slide. So right now, everyone is muted so that we can avoid background noise during the presentation. You will see on the screen now a screenshot of the menu that you should be seeing on the right-hand side of your screen. You'll see that there are two ways to ask a question. The first is the hand function, so you can click on this to indicate that you are raising your hand. Please feel free to click on this if you have a question or comment, and we will call on you at the end of the presentation. You can also use the question box for questions. So what you'll do is simply type your question into this box and I will relay that question to Ian and our panelists at the end of the presentation. So with that, let me introduce today's speakers. So Ian Brogum is our Senior Manager with Axion's Global Advisory Solutions team. He specializes in digital strategy. And in this role, he works with Axion's partners and clients to design digital strategies and to launch digital products. Ian has extensive experience in designing, launching, and optimizing digital products and services to drive expansion for financial institutions. Before Axion, he helped build an agent network business in West Africa and has also worked as a consultant to deliver projects for blue chip clients globally. So our first panelist, Gift Mahabo, is the Director of Operations and Technology at Axion's Global Advisory Solutions. He is responsible for designing and implementing technology solutions for banks and MFIs to become more efficient and to reach customers more effectively. Gift has over 25 years of experience from managing information communication technology in the financial sector and the ICT service industry. In his last assignment in Nigeria, he worked as the Chief Information Officer for Axion Microfinance Bank for over 6 years. And he has worked with CompuLink Holdings Limited as the Technical Services Director, Kingdom Financial Holdings Limited as the Director of Information Technology, and as the Chief Information Officer, MBCA Bank. Our second panelist on the line is Monika Poor. She has more than 17 years of experience across diverse businesses such as banking, payments, and hospitality. She is Axion's Director of Digital Solutions India with our Global Advisory Solutions. And in this role, Mona supports Axion partners, investee companies in planning and implementation of the digital initiatives. Prior to coming to Axion, she worked with the National Payments Corporation of India as a RuPay product manager and was instrumental in launching RuPay. Key initiatives linked to RuPay and achieved significant milestones. Prior to the National Payments Corporation of India, Mona worked with Kotak Mahindra Bank, managing the debit and prepaid credit card business, and before that, Visa, fulfilling various roles across business development, product management, and marketing. So with that, let me turn it back over to Ian, who will tell us why we here at Axion are so focused on this topic of digital identity.
Thank you, Priya. Welcome, everyone. Thank you for joining us today. As mentioned, my name is Ian, and I'll be leading today's webinar on digital identity. Structure-wise, we'll kick off with a quick introduction to our topic, why it's important and the impact it has on financial service providers, before moving on to some discussions with our panelists on issues such as privacy and security, and finish with some questions from the wider attendees. As a starting point, I'd like to go into a bit more detail on why we see identity as something that's worth highlighting, and talk about the scope of application it has across financial services and beyond. A lot of what we're seeing today, not just with traditional lenders, but with new organizations as well, is that they're under enormous pressure to digitally transform the way they do business. We'll go into a bit more detail later and on exactly where these pressures come from, but essentially, the benchmark institutions have to hit in order to remain competitive is continually being raised by the introduction of new technology-enabled data-driven challenges in the market. And I'm sure you've all witnessed the coverage on this. I don't know how many of you have the various alerts set up on breaking news or Google, but there are essentially new approaches being reported on a daily basis: blockchain, artificial intelligence, etc. What's interesting for us, rather than the use of any one particular type of technology, is more how these technologies are being harnessed to do interesting things with data. And beyond that, how readily they can be adopted to help transform the businesses we work with. So how does this align with identity? Well, when we refer to identity, we're talking about personal data. This includes any and all information relating to a particular individual, including name, address, date of birth, height, and even behavioral patterns. Specifically, and where the conversation becomes interesting, is when we start to consider the different ways we can collect and interpret that data in order to do extraordinary things. And this is where the topic aligns with the needs of our partners. How can we use identity data to reach new markets, serve clients faster, and push more personalized products and services? And what are the implications of doing so? Ultimately, these questions lead to a discussion on technology. And where you come across the relationship between technology and personal data, you're likely to encounter the term digital identity. So what is a digital identity, and how does it differ from what we previously described? Although there's probably no universally standardized definition of what constitutes a digital identity as opposed to a regular identity, for our purposes, and to keep it simple, our interest in the term is relevant to anywhere technology is used to collect, store, use, and authenticate to personal information within the digital domain. As an example, where information about me has been proofed to a database somewhere and is then used as an enabler to offer me products and services after I've proven that the data is mine, that can be classed as digital identity. It's important to note that there are more complex definitions which we might use in a technical paper, for example, but I think for our purposes, over the next 45 minutes or so, this definition covers what's sufficient for the quality of discussion we want to have. In order to contextualize the types of data transactions that we're talking about, I'd like to walk through a simple use case and then move into a more complex discussion on how trends in identity are impacting the world of financial services. As human beings, the foundation of our society is built on an ability to establish relationships. And these relationships are often based on a knowledge of past interactions and attributed information. We build friendships with people who share similar interests, have preferences for working with colleagues who gel well with our professional culture, and even frequently shop at restaurants or supermarkets that best meet our personal needs. Access to data is crucial to enabling us to build these relationships. For example, I might meet someone who tells me that they're a similar age to me, interested in animals, and support the same football team. Based on this information, I might make a decision on how I'm going to interact with this person. Similarly, if the same person told me they like combat sports, bungee jumping, and chai latte, I will still make a decision on how I engage, but that decision may be completely different from the one made in the previous scenario. My interactions and the parameters of my relationship with this person are being influenced by the information I am able to attribute to them. This is pretty straightforward so far, but I promise you I'm going somewhere with this. It begins to get a little more complex once we start considering whether the person I'm talking to, in this case Frank, really is interested in the things he's telling me he is. Or indeed, if he really is Frank at all. On the flip side, how does Frank know I'm genuine? In this scenario, the information Frank is giving me is what we call self-asserted data, which means, although it may well be true, I have no guarantee on its accuracy beyond Frank's confirmation. Therefore, my ability to take risks and make important decisions based off of it is limited by the fact that it has a low level of assurance. This points to the need for a mechanism of establishing trust. So how do we solve this problem? Typically, the solution is fulfilled by the introduction of a trusted third party. In our example, this is an entity that both Frank and I know, who can verify our claim of being who we say we are. In the instance shown in the diagram, both Frank and I know Sally. And just as importantly, Sally knows us. Because of the nature of our pre-established relationship with Sally, we both trust her enough to believe her when she tells us that the other party is authentic. I'm happy to believe the information that Frank is giving me is correct because I believe Sally's confirmation. And this is exactly how it happens when we replace Frank and Sally for organizational entities. In the instance shown in the diagram, the role of Sally has been replaced by a government body whom at some stage I have registered my name, address and photo ID with. The role of Frank is exampled by a commercial bank. When I come to open a bank account, the bank needs to access proof that I am who I'm claiming to be. They're able to verify my claim because they can validate it via a government channel. If the government says I am Ian Braum, then that's good enough for the bank to satisfy their compliance needs. So how would technology be used to facilitate this type of transaction? As a prerequisite, I would need to register my information with the government and have it proofed into the digital domain. At some point during this process, they would take some measures to check the genuineness of that data. Once registered, the government would need to issue me with some mechanism for proving my claim to the information which has been recorded. They do this by binding my data to an authentication credential. This credential is represented as a secret shared between me and the government. I can show possession or knowledge of this secret to them at a later stage in order to prove ownership of the registered data. So as an example, once my information is registered within the database of the government, they could issue me with a smart card housing a private key. When I enter the bank, I can place this smart card in a specially designed acceptance terminal, which is used to communicate with the government in order to confirm that the private key is related to the owner of a specific set of personal data. Once this has been approved, the government might send to the bank the name and address information I originally registered, based on my authorization to do so. So this is a standard use case for what most of us probably think of when we start to talk about identity. Name, address, and sometimes photo are staples of KYC documentation and the foundation of many national ID schemes. Things get a bit more interesting when we start to think about other things the bank needs to know about me. For example, can I be trusted to repay a loan? Or am I conducive to acting fraudulently? The need to gain an understanding of my identity goes far beyond these standard types of information. In order to register other aspects of my personal data, it's likely that the bank will have to contact multiple third parties. This might involve governments to prove my name, credit bureaus to check I have a history of repaid loans, or even other banks to verify financial behaviours. Each entity is the custodian of a piece of my personal information related to my behaviour or biological composition. At one stage or another, these organisations have collected information about me and potentially can provide it digitally to other organisations that can leverage it for different purposes. This is, of course, provided there is a mechanism for doing so. However, the challenge emerges when we start applying this scenario to the context of an emerging economy. In the event that I am a smallholder farmer in rural Nigeria, for example, it's unlikely personal information will be available from these types of organisations. And in the event that it is, the requirement for a mechanism for access still applies. And this is the crux of the issue when we start to talk about identity for financial inclusion. I need an identity in order to access formal financial services, but I may not have one because I don't operate within the formal domain. Although there are manual processes for understanding a client's identity data, for example, sending a loan officer to interview them, these are costly and as a result not scalable. There's a need to establish a way of understanding the identity information of the financially underbanked at scale. The prospect of solving this issue has driven investment in a range of identity-enabling solutions. These look to facilitate the relationship between commercial organisations such as banks and the third-party organisations that hold personal data on their clients. In order to overcome the issues surrounding data availability, these identity-enabling solutions have adopted innovative approaches, a few of which are exampled on this slide. So the first of which is the use of alternative data sets to build customer understanding. This involves using non-traditional data sources for analysis in order to derive useful insight on customer behaviours. For example, analysis of mobile network transactions such as calls and airtime purchase to indicate creditworthiness. Another is the use of biometrics to drive convenience. The Aadhaar system in India is the world's largest biometric-enabled ID system, which links name and address at the point of registration to an individual's fingerprints and, in some cases, iris scan. This means that at a later date, anytime they want to prove this information, all they need to do is present a registered biometric and unique ID number to an interoperable acceptance terminal. Next is the use of mechanisms which encourage customers to build transactional histories. This is usually achieved by incentivizing interaction within digital domains. The moment someone starts interacting within a digital domain, there is a potential to use their data footprint, the data footprint they leave behind even, to gain insight on that individual. We recently worked with one of our portfolio companies in India to do precisely this, incentivizing digital record keeping of business transactions to access to services that help micro merchants run their business. The next one, and perhaps controversially, is APIs to drive interoperability. Some people might argue that APIs have been around for years and are not very innovative, but I think that as they become more prolific, their ability to enable convenient access to data assets and functionalities within specific organizations has the potential to catalyze innovation in the identity space. And last but not least, advances in data analytics. The more accurately we're able to draw insight from customer behaviors, the more advanced we can be about the services we offer them, and more confident we can be about the behaviors they may exhibit in the future. Now, not mentioned here, but worth mentioning, is also innovation in the way we store data. There is a lot of discussion in the media about the appropriateness of centralized databases and whether they create a convenient point of attack for cyber criminals. As a solution to this, we also hear a lot about personal storage devices and, of course, distributed ledger systems such as blockchain. When we talk about personal storage, we're talking about the capacity of our laptops, phones, etc., to hold and secure personal information. A benefit of this type of storage is that if someone wants to maliciously access the identity data of multiple individuals, they would have to break the security of the individual devices on a case-by-case basis, rather than gain access at a central point. The interesting thing about blockchain, besides the way it distributes its database, is the anonymity it enables for its users. It does this by issuing an authentication credential to users without necessarily binding that credential to any other registered information. This means that the owner of that credential remains anonymous. While this has been proposed as an approach which is potentially very privacy enhancing, it can create issues when trying to recover access to information in the event that your credential is lost. So with all this innovation in the space, what are the benefits of adoption for financial service providers, and why is it having such an impact on the services they offer? Essentially, the main benefits can be articulated into, but are not exclusive to, 4 broad categories. These are defined as access to previously untapped markets, insight on opportunities for new products and services, the ability to drive more frictionless processes, and the ability to drive more personalized client engagements. Starting from top left and then moving clockwise, access is enabled where financial service providers are able to meet regulatory requirements on KYC and reach comfortable conclusions on risk profiles using personal data that was previously unavailable to them. This could involve access to mobile money transactions, name and location information, which is used by a commercial bank in order to offer loans, for example. Once access is achieved, the ability to draw insight on consumer behaviors can also allow institutions to identify their needs and wants more accurately. This information can then be used to tailor products and services. A progression in the level of analysis undertaken to gain this insight is to then apply its learnings at the level of individual customers to drive personalized engagement. This could involve anything from communicating notifications at specific times to allowing special concessions on repayments based on past interactions. Finally, and perhaps the most prominent benefit to resonate with FSPs today, is the ability to leverage available systems to expedite what would otherwise be very manual and labor-intensive onboarding and authentication processes. And this speaks to the ability of being able to swap collecting physical documentation for the capture of a pre-registered biometric, for example. So as the benefits described continue to be leveraged, the trends they affect are impacting the landscape of financial services on a global scale. Regulation, consumer expectations, and competition have all been impacted, driven by the changes in technological capability. This diagram illustrates how these pressures are affecting financial institutions. As technology continues to improve the customer experience, consumer expectations are demanding faster, more frictionless transactions and onboarding processes. With limited access to core infrastructure and digital channels, this is creating a rift between the capability of traditional lenders and new data-driven competitors who are now equipped with a scalable solution for servicing the same market. As these competitors race to satisfy consumer wants, regulators are implementing new rules to govern the capture and processing of personal information to protect user privacy and prevent exploitation. The cumulative effect of these trends mean that financial service providers, such as MFIs, are being pressured to make a shift in the way they have traditionally conducted business. New players who have access to more convenient, efficient mechanisms of understanding customer needs, wants, and risk profiles are threatening to disintermediate legacy operators by leveraging the advantages of new digital identity technologies. However, for the operators behind the curve, effecting change is easier said than done. Ultimately, it boils down to the acquisition of systems and skills necessary to collect and analyze personal information. And for many, this raises a number of concerns. A selection of these concerns are exampled on the slide you see now. And these are some of the questions an FSP would need to answer when building a data strategy that incorporates mechanisms for leveraging digital identity. For example, where should they be leveraging partnerships and available infrastructure as opposed to building their own internal capacity? And given the potential for increased scope and distribution of sensitive data they manage, how can they abide with best practice privacy principles? And alongside everything else, where they are leveraging partnerships or investing in their own infrastructures, what are the advantages and disadvantages of different technologies and solutions? And this is really where I'd like to introduce discussion with our panelists. So I'm sure you'll all join me in welcoming Mona and Gift. Hi both, thank you so much for joining us today, especially as you're both in different parts of the world, in different time zones. Welcome.
Hi Ian, thank you.
Okay, thank you. How are you, Ian?
Very well. Now, you both have had extensive experience working with financial service providers throughout your careers, and in those experiences have no doubt come across the strategic and operational use of personal information more than once. So my first question, and Gift, I'd like to start with you, is how real is this threat of disintermediation for traditional lenders today? And what are the biggest challenges for FSPs in acquiring the required functionality to respond to competition?
Okay, Ian, in our sphere of experience, we're finding that most of our partners are actually finding this threat to be real, and it's actually coming very fast. There are quite a lot of entrants within their markets, which are actually springing up very fast, especially in Africa, being driven mainly by the customer mobility, driven by the smartphones. And these organizations are on a daily basis taking over the core bank functions for most of our partners, like lending, investing, payments, money transfer, and sometimes even offering free online financial advice. And what is quite surprising is that most of their customers are actually responding well to them and increasing the trust that they've got in these new entrants who ordinarily don't have access to. Then what we are finding quite surprising is that although the service is quite remote and impersonal, what is driving the adoption is the speed of delivery and the ease of use that they are providing through the digital identity and other trends that are coming in the market. But what is also concerning is that the competition is not just coming from these new entrants, but you also have got these heavyweights like Google, Apple, Alibaba that are also getting onto the action. And these digital giants with their millions of users are also offering now payment services like your Google Wallet, the Apple Pay, the Alipay. And one of the challenges that the FSPs are facing is that because people like these brands and they use them every day, they also ironically are the first places that people go when they need information or when they want to send an email or upload photos, or either when they want to shop online. And for most of the FSPs that are trying to go through a digital transformation, or even the commercial banks, you find that most of the mobile apps that they are creating are actually being offered to these customers through the app stores that belong to some of their competitors like Google and Apple. So you'd find that it's easier for these institutions to market directly to these clients because they've got access to the data that they're collecting in the background when these clients, FSPs, are actually using their services. So then it begs the question, what are the biggest challenges that FSPs have in acquiring the required functionality? One of the challenges that you find with most of the FSPs is that they are still using legacy systems, which are running on traditional infrastructure, and they don't offer them with the required flexibility for them to be able to adopt easily to new technology and also to new processes and systems. So, and also they don't know how to go about it. Everybody will talk about digital, but the major challenge that you find is, how do you do it when you have got other business issues to attend to, and you have got the transformation, which is a time consuming, and also you don't have the internal talent to be able to drive it. Then you find that in most of the FSPs, they are regulated by their central banks. So it brings in a risk aversion and also the stringent regulation, which makes it difficult for them to be able to leverage on some of these experiments without attracting attention from the attention and penalties from the authorities. Then you find that banks now need to change the outlook and the way they see things, because what has happened over the years is that there is no such thing like loyalty in banking anymore. But one thing that customers are now completely devoted to is the effortless experience. So the more effortless experience they get, the more loyal they are to the product and to the bank. Then you find that banks, by their nature, they've got what are called organizational silos. You've got treasury, which is most probably is a standalone unit. You've got risk, which is a department which is standalone and which has got its own policies and procedures. Then you also have got a compliance unit. And because of these silos, it actually hinders the flexibility and the ease of the bank or organization in terms of adoption of products and also coming up with new systems. Then you also find that the products lines that are in banks by their nature are fractured. You have what is a savings account, you have got a current account, and these two have no relationship between the two. So you find, because of the fractured product line, it's very difficult for them to be able to adopt the technology across the whole ecosystem in terms of the product that they are actually delivering. Then most banks have got very limited automations and long processes, which actually affect the way they can actually be able to deliver. But these are the processes that have managed to take them to where they are. So these are areas that I think we need to be able to look at as we advise our FSPs in making sure that they can adopt new technologies.
Okay, so given the context of what you've just said, I'm a CEO of a microfinance bank, and I'm very excited about all the potential new technologies that I can adopt to drive revenues within my business. But in reality, the first thing I've probably got to do is standardize and organize the data assets that I currently have on the customers that I currently have. So in the event that I've done this, in parallel, I've also got to make a decision on where I'm going to partner and where I'm going to do things myself. So with reference to partnerships, where are the risks and what are the precautions FSPs should take when building a data strategy?
Okay, Ian, with reference to partnerships, you would find that any company that is holding data is under threat from either hackers or other malicious or careless employees, even the partners that you are engaging with. So it's one of the major risks that any organization that wants to get into a partnership actually faces. then implementing a comprehensive strategy in any partnership requires a significant amount of time. So it is important for the organization to be able to provide the resources that are required for the implementation of that partnership. Then you also find that because of the limited awareness about the risks of data leaks, most organizations have got a perception that these incidents do not affect them, but affect others. Then you'd find also that most organizations have got data privacy and cybersecurity is high up on the corporate agenda, but having a clear strategy that is aligned to the business objective is still quite a gray area. Then, although there is a lot of excitement but about what data can offer the business, it is always difficult to harness that potential. So what are the steps that an organization can do to be able to use data entrepreneurial? There need to be a trend within the bank towards greater awareness, greater governance, greater investment in cybersecurity, and greater transparency in any partnership. Then, as an organization that intends to get into a partnership, there is need to create a data-driven culture. And this can be created by making sure that you provide thought leadership within the organization to ensure that everybody is aware of the benefits that can be derived from that partnership with any data-driven organization. Then within the organization, there should be there should be enough support to support the business transformation, which means that all the analytical techniques and the new solutions should require to have an organizational support. Then you need to be able to develop talent in managing the partnership, in managing the data, in managing the analytics. So there is a requirement for any organization that decides to go into these data partnerships to be able to recruit, develop, and also have mechanisms to be able to retain that world-class team, because most of these skills that are required for these projects usually are very difficult to retain. Then you need to be able to drive innovation within the organization, which means there should be a concerted effort to educate the organization in terms of the creative use of the data and analytics to be able to solve the current business problems. So those are the areas that I think organizations can actually be able to adopt in terms of managing partnerships and looking at the risks.
Okay. Thanks very much for that, Gift. I'd like to move on now to talk a little bit about government-led ID schemes. And Mona, in India, Aadhaar is one of the most subscribed identity systems in the world. So what I'd like to ask you is, how has this benefited financial service providers, and how do you think it will continue to add value over the long term?
Thanks, Ian. So Aadhaar, essentially, yes, it is the most subscribed identity systems in the world. And it's around this core proposition that India built what we call today is the India Stack. So essentially, just for those who are not so familiar with this term, India Stack is the set of APIs which allows institutions to utilize the unique digital infrastructure in India around Aadhaar, thereby enabling a presence-less, paperless, and a cashless service delivery ecosystem. So Aadhaar is the fulcrum essentially on which this digital journey of the nation has begun. It essentially comprises 5 components: Aadhaar, eKYC, eSign, DigiLocker, and UPI. Aadhaar, from the perspective of what benefits it's provided to financial service providers, it's essentially initially helped them roll out eKYC, or the electronic know your customer enablement, and thereby reduce friction in customer onboarding, which is one of the most critical elements, in the life cycle of a customer with any institution, be it banking, insurance, or even any other form of services. And thereby it has helped in build confidence that the service provider is running a business on state-of-art machinery. Going on, the early birds who digitize customer onboarding using eKYC are now exploring other components of India's stack to give customers the full flavor of a digital experience. Having said that, the customer journey across these products will now need to be monitored and supported by FSPs to ensure minimal discomfort to the customer in terms of understanding and adopting the change. I mean, for a market like India, where people being used to waiting for maybe up to a week for a bank account to get open, and now it can happen in a matter of a few minutes at their doorstep instead of having to really visit a branch. Then this being just the beginning, we feel that a number of services will subsequently be introduced with some use cases around blockchain, and with the centralized storage of data with the government body UIDAI. We also feel that additional layers of security, both at the Aadhaar as well as the FSPs and other institutions, will really need to be brought in over a period of time to deliver value to the customers, and without really impacting customer experience.
Okay, interesting. And the other thing I want to ask you about is that Aadhaar, it might be a victim of its own success in terms of the negative press it gets. It gets a lot of negative coverage in the media regarding privacy and data protection. I just wanted to ask you what your opinion was on this and whether you think it's warranted.
Right. So Ian, there is long-term value which everybody in the ecosystem is trying to drive through Aadhaar, whether it's the government, whether it's regulatory bodies, or even institutions which are actually becoming a part of this journey. The people at large are also responding positively to this change, and they are exploring new elements within the India stack. What is also noteworthy here is that India is a very young population, with a median age of 28 years, where you see, a lot of these youngsters, the youth, are the early adopters of these new channels and technologies, and they are also acting as influencers for others to adopt. Now, strange as it may sound, any change, we all know, is marred with negativity and with some form of opposition, and Aadhaar is no different in that sense. Interestingly, when you look at the negative coverage, the common thread which you find across all these reports in the media is not about the core Aadhaar system being compromised or exposed or breached, but it is this illegitimate usage of this access which essentially comes to light. While I believe that it is good that information is available for people to know what's happening around, it's the way it manifests, and there is a hype created which then deters customer adoption, and which is worrisome. And hence I feel that maybe some amount of restraint by the media, or some amount of clarification or being put up out there by experts to really tell a commoner or someone who doesn't understand technology, who's not on the literacy side of things and understands these kind of things. So to put it very simply across to them that what actually is the problem and that the core is not compromised. I think that's very important.
Okay, thank you. So I've been asked to leave at least 20 minutes at the end of this webinar for questions from the audience. I just have one burning question that I want to put to you both, as we're on the topic of privacy, and it's quite it's quite hotly covered in the media at the moment. We have the introduction of GDPR on the 25th of May. I think China has implemented or is implementing something similar. So given that emerging markets are, tend to be more difficult in terms of connectivity, literacy levels, familiarity with technology, how can we balance or achieve a balance between security and usability that enables privacy enhancing services? And Gift, I'll put that to you first, if you like.
Okay, thank you, Ian. On the general data protection regulations, we believe that in most of the emerging markets, the issue of privacy will still continue to be quite a topical issue. Although the regulations were released in Europe, we believe that any organization that has got any interaction with a European Union-based transaction would be affected by the data protection mandates that are required in terms of compliance. But what we would like to be able to do in the markets, where especially in the emerging markets, where you would find that although the regulations have not been enacted, but we believe that organizations can actually be able to look at some alternatives which might not be as costly, but would allow them to be able to achieve the same type of goals without, in terms of functionality and also in terms of the protection. So some of the things that organization can do would be to start by understanding what are the business information assets and also the information risk that they're actually sitting on, then be able to try and understand who are the other parties or partners that interact directly with them, which is really understanding what is your current supply chain. Then they can be able to do internally with their internal skills to be able to perform a data protection impact assessment, to be able to say the data that is sitting within my platform and within our system, how can we be able to look at what impact, what the impact that it would be felt in the event that there is a leak or there is compromise in terms of the customer data. Then they can be able to, for the purposes of maintaining compliance, you can be able to have a data protection officer in some cases where your sensitive data has got somebody who has got a responsibility and accountability, which makes sure that the data is protected. Then they could be, would encourage them to deploy appropriate and some adequate security measures to make sure that they're as close as much as possible to the standard. Then obviously there is a requirement for an implementation of a data security incident notification, which allows for incidents that happen within the organization so that they can be recorded and corrective measures taken, and any corrections that are taken can be recorded so that we don't have a repeat of those incidents. Then obviously there is a requirement to secure affirmative consent to process personal data, especially from the clients. Then we believe that putting these procedures in place to address the issue of access, how you field personal information about customers, can actually be able to meet some of the guidelines of the general data protection regulations without conforming 100% to the standard. So that's what we believe we can be able to do with some of the partners and the banks that are in the emerging markets.
Okay, Mona, would you add anything to that?
Yes, Ian. I think privacy means different to different people, and it varies from culture to culture. And when institutions are engaging with customers, the consent on data usage and its terms and conditions are a very fine print. Most often than not, I believe customers don't even read this fine print while giving consent. And in emerging markets, customer literacy, comfort with technology are glaring issues which can't be ignored. We also see an excessive usage of social media platforms in the emerging markets, and there is a good amount of information which is available about an individual, and this warrants the need to question what privacy means in the first place and how consumers can be protected, especially in a scenario when a lot of these consumers are willingly sharing this information online. I believe in emerging markets, nationwide awareness drives need to be done and backed by recognized bodies such as regulators, so that consumers respond to such awareness campaigns and are cautious while sharing data and actually go through the fine print while engaging with an institution. Further, I also feel that institutions and service providers must also use information ethically, keeping in mind customer interests while driving their own business interest.
Okay, thanks both. I think that you both highlighted some really interesting points in that discussion there. So at this point, I think that I'm going to apologise to Priya for overrunning by 7 minutes and hand over for questions from the audience.
Yeah, thank you, Ian. Yeah, that was quite an engaging discussion. And we've also had several questions roll in already, so I'll address those. But for those of you that joined a little bit late, I just want to reiterate that there's two ways you can ask questions to both Ian and the panelists. You can either type your question into the question box, which is on the right-hand side of your screen, or you can click on the hand icon to raise your hand and we can call on you. So let's go ahead and turn to some of the questions. And I think one that I think is very critical just came from Sari Greenland. So we will unmute you so that you can ask your question live.
Hi there. Thanks very much, Priya. This is Carrie Greenland. I'm at the GSMA, based in London. I have a quick question for the two panelists. I'm quite interested in the concept of economic identities or profiles that can supplement a user's official identity with perhaps transaction data and could potentially improve their creditworthiness. I'm wondering if you see financial service providers as being more open to accepting these types of functional identity in the future in terms of assessing loan risk and extending credit to historically underbanked populations.
So I'll take that if you don't mind. I think that the way we view identity, and correct me if I'm wrong in your understanding of an economic, or in my understanding of an economic identity, sorry, is that we don't necessarily differentiate one set of attributes from another from a categorization point of view. And the reason that we approach it from that is to do precisely what you mentioned there, is that I think that there's a challenge in moving the concept of identity beyond what we traditionally understand it as, which is name, address, maybe photo, and then move it more onto the areas where we can start leveraging financial transactions. We can start leveraging Facebook information if it turns out to be predictive. You know, there's lots of opportunity to expand the scope of what we consider that to be. And once we start realizing that there's value in these different types of transactions and being able to exchange different types of data, then there's business models that can be built around that. So I think that, you know, it's definitely something which we are engaging financial service providers on today. I think that because typically the first step is to get them to align their, where their data is at the moment and make sure things are standardized and get to the point where they can use them for other purposes. I think that it's probably more of a long-term goal than a short-term goal for the typical portfolio member that we work with now. But it's certainly something which we're very interested in. Gift, Mona, do you have anything to add?
Yes, Ian, just to add to what you just said, if you look at India as an example, where, it was first the identity, and then came in eKYC, eSign, DigiLocker, and UPI. And credit bureaus on the other hand, which are not integrated presently with the India stack, but are a separate component, where you can fetch financial creditworthiness information of an individual. So I believe with Aadhaar seeding happening across institutions where a customer is engaged with for consumption of products and services, I think in the long term, as a roadmap for India Stack, I do see the the economic identity of an individual getting bundled with the identity product that we have here in India today.
Okay, great. Priya?
Yep, perfect. Thank you so much. And so, we have one other question from Mahabo Abodu. I don't know if I said that name right. But Mahabo, we're going to unmute you right now so you can ask your question.
Okay. Thanks. So I'm Mahabo from Burkina Faso, and it's not really a question, but it could be to better understand. Because in West Africa, we are facing in the real challenges about customer KYC. As you know, digital finance services actually is growing in our context, and most of the time, its business model is based on the telco partner KYC data. In that case, in the most of time, this KYC information is registered on the ground on point of sales customer agent place. So, and there is any way to validate the information sent to the service provider, financial service provider. In that case, how can we challenge this kind of information? Because there is no a real partnership with the government which delivered this ID cards. Just want to know if someone can share with us some experience in other country to address this challenge. Thanks.
So I'm gonna have to apologise, but I don't think I fully got that question. There was some disturbance on the line, and I didn't catch it fully. Is anyone able to summarise, or did anyone else catch it? Mona, Gift, I don't know if you managed to catch that.
You're right, Ian.
Okay.
There was some disturbance on the call, but what I did get is that for lack of a central identity system like Aadhaar in India, in West Africa, the question essentially is on how do they validate the the identity of the individual at the time of KYC in a digital manner. Am I right in understanding your question?
Yes, that's right.
Okay. So let me just go back a little in time when, Aadhaar was being conceptualized, a little before that, and that was exactly the question that we had here in India, saying, an individual who is engaging with an institution for a product or a service should go and register with that institution to thereafter digitally validate himself. And hence, there was some amount of biometric data capturing happen, and this initially started with the banking institutions. So this was more of a closed loop biometric database created by banks for their customer base itself. And then as the thought around, a digital identity and the way it can be explored for a country like India and the plethora of problems that we already are dealing with, a centralized identity platform was conceptualized, and that's how Aadhaar was built, and it is where we are today. So the right solution for having this is a centralized government or a regulator-owned body, which has the desired security standards built around to be managed at a country level, to be able to offer a digital identity based program and related solutions thereafter. That is the solution, because else you're expecting customers to have this identity across institutions, which means that their biometric data is captured by many institutions where they're dealing, so an insurance company, a bank, a mutual fund house, etc., which can be counterproductive in terms of data management and also customer security.
Okay, just to add on to what Mona was talking about, you would find that my experience in West Africa, which is close to your country, Burkina Faso, you would find that the number of mobile operators that are registered, for example, in Nigeria, there are about 120 million, which means that, but if you look at the number that are registered through the banks, it will be around 30 million, who are people that have to go and submit their KYC. And it's usually the government that can be able to drive that enrollment, where they can be able to force the MNOs or whoever is regulating them to be able to hand over that data or validate it, so that you can be able to identify all the people that are holding on to the SIM card. So the only way that exercise can actually be able to be initiated, it would be through a government regulated body, which can be able to come in, which has been what made the Aadhaar system more successful in India. So you would find in most cases there's always competition between these regulatory bodies in terms of who actually is owning that particular customer. And I think that's the major challenge that we've got in most of the developing markets.
Good. Thank you so much.
Great. Thank you.
Great. Okay, Priya,
Yep.
we've got time for one more question.
I think one more question, and then we might have to cut it off. But we have one final question from Kathleen Yarski here at Axion.
Thanks, Ian, for this great presentation, and thanks, Mona and Gift, for sharing your valuable experience as well. We've heard how FSPs can tap into the various data streams generated by individuals to tailor financial services to their unique digital identity. How is this process similar or different for micro merchants or other informal enterprises in the context of financial inclusion? So in other words, how could FSPs leverage digital identity and enabling technologies to support, for example, supply chain finance?
So I think that when it comes to the likes of micro merchants, the identity they have as an individual is probably not going to vary tremendously from the identity that their business has. However, as we start to evolve technologically, or as we start to become more mature or engage more mature merchants, I think that the ability to be able to understand and interpret different data points around a legal entity or a business or even a software in the instance of the Internet of Things, and as we come to start giving more permissions to different types of technologies that we own or have access to, I think that it is, it's absolutely crucial. And to go back to your point of supply chain finance, particularly looking back at the slide or the innovation slide on being able to get merchants to transact in the digital domain, I think that these types of innovations are going to be crucial in being able to capture the identity information that's going to be able to allow different lending products to slip into whichever type of supply chain that they're currently embedded in. So I think that it's a very exciting area. I think that the basic principles of how you apply an understanding of an individual's identity is not tremendously different from how you go about understanding an entity or an organizational identity. And I think it's certainly something which will follow very closely in the future.
Thank you.
Super. Thank you, Ian. It looks like we've reached the end of our time, but unfortunately we had a lot more questions. So sorry for those of you where we weren't able to address your questions. If you'd like to email us, please, feel free to follow up. Thank you to everyone who was able to join us to learn more about digital identity for financial inclusion. And thank you to Ian, Mona, and Gift, and the rest of the Axion team for putting this together, and for the Citi Foundation who made this presentation possible today. We look forward to seeing you at our next webinar and hope you all have a great morning, afternoon, or evening, wherever you are in the world. Thank you.